Yeah, makes sense. Even I was keeping busy from last 2 weeks, so I was not able to devote that much time for the market study and studying books, etc. So perhaps we'll be needing more eminent people who are regularly, and especially if Yogesh Chande sir joins today, he has a very vast knowledge about the working of SEBI and related things, and especially this matter, he'll be very well versed with.
True.
So
See,
hopefully,
it's a legal matter, so someone like him would add a real value to this space. So let us wait if he joins us today.
yeah, right. And another thing I observed, when the market was going higher high, then there were more people who were keen to join. And as we are seeing the other facets of the market, which is, I mean, evident that market sanity prevails. So we are seeing less participation these days. So people are kind of turning bearish. That is one thing also. So perhaps corona has subsided and people are spending time with their families on weekends, so that might also be the case.
But you have
In the
tweeted this
meantime,
link to this space, and many people have retweeted it. So I'm hopeful that more people will join us and make this discussion more meaningful.
yeah, so guys, in the meantime, I will once again request the audiences, if they have any question, or in the meantime if they want to add anything, they are more than welcome. We have one request. Gaurav Tiwari. Hi Gaurav, welcome to the space.
Hello. I
Yeah, go ahead.
no, I mean I don't want to say anything. Just that these things happen. Some people run, but then they will come back again. That's what my point was.
Yeah, Gaurav, the sad part is when the market corrects, or maybe the market sanity prevails. That is the time when one should be staying in the market, staying the course. But what people do is, when the market is running and it is around its all-time high, then more participation is seen. And as market corrects, when more businesses are available at value buys, then people run away, and especially the weak hands. So we also have Anup with us. Anup, I have also sent you a request if you want to join as a speaker.
They don't know the potential of India. So maybe I think the communication around that part is not there. That's why people, yeah, running.
Yes, I think gradually people will join, and as and when they join, we will assimilate everyone on the floor. So in the meantime, we can start with today's discussion. So starting from you, what's your take on SEBI's final order, and what's the matter if you would like to tell the audiences? And in the meantime, Anup, we are sending you a request if you want to join. Yes, are you there?
Yes, I'm here. Excellent
Yeah, go
investor.
ahead.
So shall we start?
Yeah, sure.
Okay, so let me just give you the background of the today's Twitter space. So this relates to the SEBI order which came out yesterday in evening, and media has covered it today in every newspaper. You could find the this matter. This pertains to the complaints received by SEBI in 2015, December 2015 to November 2016, and complaints were regarding the corporate government issues in NSE while appointing a KMP without checking the suitability of that person at much higher compensation package and without taking the proper interview. There is another method. There is another matter related to NSE, which was co-location matter. That also had come to the SEBI's notice, but that was much prior matter. So this case pertains to the 2015 to 2016, during which three complaints were received by SEBI, and then E and Y also came into the picture, who conducted the forensic audit at NSE's end, and they submitted their reports, and the SEBI investigation started. And yesterday, SEBI has come out with a final order in which SEBI has stipulated fine as well as a debarment of these people who were part of this investigation, except one person. So, see, there were five people other than the SEBI which have been mentioned as a notice in this SEBI order, out of which two were the former MDs of NSE, one was the president and secretary, fourth one was chief regulatory officer, and the sixth one was Mr. Anand Subramanian, who was the chief strategy, who was initially appointed as a chief strategic advisor to NSE, but later on he became the group operating advisor and almost as a second person in command in NSE. So, what we would like to discuss in this space with all the speakers and listeners, that what this order, SEBI's order on NSE and the other five people who have been mentioned in this order, what this SEBI order mean to all these people? What is the way forward with NSE? Whether NSE is going to come up and clean up whatever has been mentioned in the SEBI's order, and what is the way forward for its upcoming IPO? Because as I understand, there were a couple of issues. One was this corporate governance issue on which the SEBI order has come yesterday, and the other one is co-location matter, which has also been discussed widely in both in media as well and other spaces. So we would like to discuss all these things, and also uh, there other than the monetary penalty which has been imposed on NSE and other individuals in SEBI's order, SEBI has also barred NSE to launch any product for the next 6 months. So this can this make space available for the other exchanges in India who are there in the stock or commodity or currency or power trading? And if there are any other topic related to stock market, we will take up this one. Yeah. So, excellent investor,
Thank you
please
for
go ahead.
briefing about this issue to everyone. And I was reading briefly, so the penalties which has been levied, and I was studying, and it was mentioning that the investor protection fund, that money would go to investors protection fund in SEBI. And we are saying, as and when time is progressing, the regulatory body SEBI has been coming very strong, and the protection of retail investors has been its sole aim. So as we are very aware, in the past there were so many, probably the people who were, I mean, by different authorities and maybe different bodies, they were what we say, उनको ठगा जाता था. तो SEBI has come very strongly, and we also have Anup with us. And Anup, if you have any views on this topic, we would love to hear from you as well.
Hello, all. Am I audible?
Yeah, you are audible.
Yeah. So, talking about this SEBI's final order, like it's more welcome from in a retail investor point of view to make markets clean from that point of view. But as far as our investment horizon and all that stuff is concerned, retail investors are not that much impacted by this. So we can be a keen observer and just watch events, what's happening over there, and try to understand more about next what will happen next around NSE as a platform and that stuff. But as an investor and our investment strategy, it won't affect us much because it is a verdict on what has already happened. So it's just we will watch for what will be the end result of this. So as far as order is concerned, I am just more keen about the result and its impact. So happy to see this happening now. So it's more of such bad people getting out will be a beneficial for retail investors. So that's my, like, as a retail investor, small observation is there. Yeah.
Yeah, thank you, Anup, for sharing your views. Any other speaker would like to speak on this topic?
So yes, I think we three of us are here for now. Sanjay is busy, and he himself will come to the space as and when he gets free. So also, I would like to hear about the prospects of NSE's IPO going forward. I mean, what would be? Yeah, yeah, Sanjay, please go ahead.
Yeah, I'm just passing in and out, so I'm excuse my I may not be very frequent, but I did not go through the NSE order, the SEBI order on NSE, but I've read the articles that came out, and I've been reading up a bit in the morning. Couple of things to point out here. First is the complaint goes back to the mid 2010-15 era, 15-16, right? So the first thing we need to look at in a dynamic market that we operate today, I mean, whether it's the NSE or whether it's the BSE, we list ourselves and count ourselves on par with the Dow Jones and the Nasdaq. And you cannot have a justice system or a supervisory system that takes 6 years to determine what is right and wrong. If the complaint was of 2016 or 15, we're in 2022. Everybody who had to con the retail investors has already done it and gone. I know about the Baba in the Himalayas, and the COO they appointed on a contractual basis. So that's one point. Second point is, how is this, SEBI's action might restore a little investor confidence in the regulatory body per se. But please look at how it's going to affect. I mean, once this spreads to the media properly, in the regional media, it's going to impact investor confidence in how the regulatory body CEO, COO, MD, chairman was operating this exchange in the boom times. This was, we were entering into peak times, and there were all this nonsense going on. So I think NSE's IPO is definitely going to be affected in some way. Investor confidence will fall a little bit in the NSE. Because of this, they will have to take major steps to restore confidence that they are now corrected themselves, and there is an investor protection system in place. And grievances can't take 6 years to be sorted out. If somebody's written a complaint, you can't take 6 years. I mean, you're not closing the doors after the horse is bolted. You're actually closing the doors after the horse is bolted and dead. It doesn't make any sense. So they should have recovered all this. We don't know how many cases of insider trading there were in that period. We don't know how many frauds happened with all this. The Baba could have been doing all this sort of stuff, and nobody would have realized. So that's my two pennies on this SEBI order on NSE and affected. But I'd also like to add, we are in the middle of a bull run, but we are facing a bearish phase. You have two major impacts here. One is the Fed's taper and Bullard's statement on raising interest rates by 50 basis points in the next month and 100 by July. That's going to hurt. On top of that, you have all these instances happening here. So I think it's going to affect how you open up on Monday. You're going to see lots of pressure going, downward pressure on the Nifty. And don't be surprised if 17K gets breached very shortly. Very shortly. That's what I have to say. Cheers.
Yeah, thanks, Sanjay. Thanks for sharing your wonderful thoughts. And obviously, that justice delayed is justice denied, as we say. So, very brilliantly explained. And on the bearish part of the market, yeah, you rightly said about the pointers or data points which has to be considered. While, but one thing is for sure, like if people who are um, who are doing SIPs for a really long time, so obviously they won't be impacted for impacted on such macro events for sure. So
Yes, that's correct.
yes,
SIP
sure.
investors and all will probably buy more. They'll buy the dip because there's going to
Yeah,
be a good dip, good time to accumulate, because you're
right,
going to
right,
see a
exactly,
huge spike. You know, and I
exactly.
also
And
think, looking at this order, I believe finance ministry, government will crack down a little bit because they have the LIC IPO coming. And if there is even a 5% hint in international markets that India is a monkey stock exchange, and you have Baba sitting in the Himalayas who are running the national stock exchange through emails, it's going to shake a little bit of international investor confidence also. Remember, reportage of these kind of orders is worldwide. It's tagged, and it's, today everybody reads everything. So if somebody is going to come into a huge mega IPO of like the LIC, sentiment has to be very very positive and upbeat. So I can see there's going to be some finance ministry intervention at some point here.
Yeah, exactly. Even I was about to ask about the liquidity thing, seeing the LIC IPO coming forward. So we move on to Yash or Anup, who want to come and add to the discussion.
Yeah, very good thoughts being shared by Sanjay ji. So, as I was mentioning, that the SEBI order on NSC and five individuals has come yesterday, and it's a very detailed order. Yes, we can debate about why SEBI took such a long time to come out with an order, but given the regulatory constraints or the law and order system in India, we can think that even the final order has come, and this is the final order from the SEBI, and it can further be challenged in SAT or in higher courts. So I am not sure whether this is an end to the story, or whether NAC would be more keen to bury the issue, clean up the system, and come out with a IPO, which is being overdue for the last 5 6 years. And as far as the other matter which I talked about briefly is the co-location matter, that matter is also pending with SAT. So that is another issue. Unless these two matters, both these matters get resolved to the satisfaction to the SEBI, I don't see NEC IPO coming in a near future. But yes, I would like to hear the views of others. Thank you.
Yeah, no, please jump in.
Yes. So I agree with Sanjay sir on the justice part and how the system works. So recently we have seen one more example of such thing. I would like to point out that so others can pitch in on that. So this is related to that CCI fined tire companies for not reducing product prices for last 10 years as per the raw material cost. So you guys remember that thing, and all the tire companies got some fine. But here this is how the system works. Like CCI allowed tire companies to do price hike when raw material costs were inflated. Also, they expect them to reduce when price falls. For the same logic behind this penalty, but as an investor or as a consumer, we don't get anything out of this, because the whatever thing is happened, it's already happened. They find the companies, they got the fine, but end consumers bought the products at high end at during that time, and the fine amount also goes to CCI, not like consumers are getting any discount or like that. So these kind of scams will happen, something will happen, the justice system will follow with the results after event has already happened, and we as a consumer or investor will always be empty handed. So that's what my observation so far. I would like to share that point as well.
Yeah, thank you, Anupji. These regulatory overhangs will always remain there. As a retail investor or individual investors, we have to face that, and uh, keep these pointers in our evaluation of a company or a sector whenever we are investing in. So thank you for sharing it. Gauraji, you wanted to speak something about this?
No, yes, actually on this the SEBI order and this thing, I'm not. I mean, I know as much as what is there in the news. I don't have the nitty gritty details.
Okay, no issue. Accidental investor,
Okay,
please
bro.
go
Yeah,
ahead.
yeah, sure. So basically, as far as market is concerned, we have two things primarily. As one side of the fraud, we were discussing the organizations involved and the big players involved. So that kind of fraud is out of reach of the retail investors. But the other side is like the due diligence part on individual investors is with us. So we should not be investing our hard-earned money directly into equity based on tips, or perhaps some unsolicited tips which we get over different platforms. The idea should be to study well, because it is your hard-earned money and you should not be getting lazy with this. And as far as the corrections, market corrections, and we are anticipating some more healthy corrections. So basically, we'll be getting very good businesses at value buy. So this is a golden time when we should not fear, and basically we say the prepared mind is one which can act as and when the opportunity strikes. So basically, this should be the idea. We should be, I mean, keep on studying whatever we are good at, the circle of competence basically. So in this way, we can cut down on the. I mean, see, nobody can be 100% correct in the market, but as far as percentage is concerned, if you study well and if you are sticking to your circle of competence, the chances are there you can cut down on 60-70% of the risks. So that is sufficient to excel in the market. So going forward, Sanjay, we will request to chip in between as and when you get time, and meanwhile we can continue with our talks. So anybody from the audience has any questions or any value addition?
Yes, please. We would like to hear your views as well on the markets or the SEBI order, whichever you feel comfortable to speak about. Please raise your hand and we will approve the request.
So Anup, what's your view on the current market situation? So how you see it, how you read it, based on your experience going forward?
So as Sanjay said, sir pointed out, we are in a bearish trend on a bullish market over a long term. So as a long term investor, we should not fear these small corrections. We should be always looking for opportunities out there and stick to our plan and strategy. What is going on in the market, and stick to our allocation strategy. And if you get any opportunities in your circle of competence, so we should not shy away from going and taking risk with those opportunities in these times, because this little risk will be appreciated when actual bull run starts. So that's like I am observing things and just continuing with the my allocation strategy. So I'm not going away from the market. So whatever is there, I'm just hoping it will come out strong. And as long as this is in bearish, because we retail investor are, most of them are salaried person, so we get time to accumulate more quality business during the such phases. So this is like more opportunity for us. As long as it is there, we should try to get maximum share out of this opportunities.
Yes, I completely agree with you that allocation also matters when some as excellent investors Sanjay ji and Anup Lamba ji has mentioned. Study well, these headwinds will always remain there. Sometimes market will worry about the interest rate, sometimes union budget or the elections. But these are the times when you need to assess your risk profile very in a very detailed manner, allocate whatever the surplus money you have, keep your allocations under check and keep on understanding and learning from markets. And as the market gives you opportunity, you can allocate certain percentage of your funds in the market. That is the way to go.
Yes. So one like observation or the thing I'm doing right now, I would
Anup,
like to share. Others
sorry,
can
sorry to
pitch
cut
in
you.
with that. So
Anup, sorry to
hello.
cut you short for 10 seconds. Guys, those whoever joined this space, I would request all of them to shower your love on the speakers. And also, we have Dhaval from the Handle Investment Book One. He has been sharing quality books, knowledge, quotes, and the quality videos. He devotes so much of time for micromanaging all these things and share with you all people. So, as a courtesy, also we should be, I mean, supporting each other grow in a organic manner. So we are not promoting anybody basically, but we are the least expectation is we grow as a big Twitter family. So yes, Anup, with this I hand it over to you. Sorry for interrupting.
Yeah, thank you, excellent investor. Anup ji, please continue.
Yes, no problem. So I was saying, like I said, there are opportunities out there, and how we can like get more benefit from out of those opportunities. So I am following like this. Like we know, all of us know, like which are the top 10 dividend paying companies across all the market caps, large cap, small cap. Anyone can Google it. But during these times, you can find those, like let's say, consider one company is offering 7-8% dividend yield. At this discount, you can generate more than 12% dividend yield. So you have to watch about those factors. So over an average at an average rate, the company gives 7-8% yield, but during this bearish phase, that company will be offered at 12-13% dividend yield. So you have to catch those falls and build your quantity during such bearish phase, which will help you going forward. So that's one of the strategy I am following to acquire more units of such long term portfolio stocks. So you have, for that, you have to know what is the average dividend yield, what is their current EPS, and then follow and find out lower PE stocks among those lists. So you can easily beat FDs this by doing just small mathematics and following this concept around the bearish phase of the market. So that's what one experience I am doing right now.
Yeah, thank you for sharing your strategy, Anupji. And this is really well explained by him. Just one disclaimer that none of us are CB registered investment advisor. So please do your own research and just listen to these strategies which are being shared by the speakers. And after doing your research or after consulting a financial advisor, then only invest. That's it from my side. Excellent investor. You wanted to say something?
Yeah, very rightly said. We are not going here to promote or solicit any kind of tips to anybody. Everybody has their own money and they are responsible for it. So due diligence on their part is the need of the hour. So without wasting time, everybody should start researching whatever they are good at. And and one more thing, in bearish market, the biggest mistake we do is we try to sell our winners and we try to average down our losers. When I say losers, the basically momentum and growth stocks which are already running at very high valuation. So when they correct, people tend to add more quantities of those. So due diligence on that part is very much required, because market sanity is one thing that over a long period of time, the actual value of the business is what you get. I mean, momentum or for transient or short term, for a short period, you may get crazy valuations, but that do not last for forever. And more importantly, the buy sell strategy should be well studied. You should have a specific goal in your mind, that with what intention and at what value you are buying a business, and when, as and when your goal completes, how your strategy is going to be. So these are the areas you need to consider all the time, because market is not a static thing. You have to move along the market, different facets. You never know, because market doesn't like uncertainty, and we are living in an uncertain world. You never know what happens next. As we are seeing that Ukraine Russia issue is basically a fear mongering thing for the market. So you never know when eventualities can happen. So everyone has to be very sure why he or she is in the market, what's their circle of competence is, and what amount of risk they can handle. I was seeing one post on Meet's handle, Twitter handle. So he was basically telling a person, a 23-year-old person in his gym, he bought a car from his 2 years profit, basically from the Corona depressed base to few months ago, and he was into FNO. So last 2 weeks had been really harsh, and that person, perhaps due to losses, drank poison. I'm not sure whether he's dead or alive, but certainly one thing is there: the risk reward thing should be very clear in your mind. You should not bet up to that level that people get into a tendency of taking their lives. Life is very precious. So don't forget to manage your personal life, professional life, and it's an activity which should be then I mean there are full time investors, there are part time investors. So you should decide what kind of person you are. Are you made for trading or long term investing? What's your circle of competence? And if you are not able to manage the efforts required for direct equity, you can always go for passive form of investing. So these are my few cents. So I would request other eminent speakers to take on the stage and carry on with the discussion.
Yeah, very well said. Excellent investor. One should be well aware of one's risk profile. And if you are not comfortable or if you are new to the market, instead of directly investing into the stocks, the better way could be either mutual fund, and within mutual fund, index funds investing could be a better option to start with, and gaining the experience in the market before you directly plunge into the stocks investing. I think we accident investor, we have a lot of people in this room now. So could you just invite some more people, those who would like to share their views? And Sanjay ji, I'll come back,
Okay.
come to you in a minute. First of all, while we are on the topic of index investing, Gaurav ji, would you like to speak a few words because you have been
Yes, yes.
investing?
Sorry to interrupt. Gaurav is more into listening side, so we will request Sanjay ji to come first, and Gaurav will.
Sure, sure, sure.
Sanjay ji, please go ahead.
Thank you, Axel. No, I just wanted to, agree to whatever you said. We are, like I said earlier, we are in a bearish phase of a bull market, of a long bull run, and many small new retail investors have joined the market in the last 2 years since COVID happened. They tend to, sell their winners during this time, exactly like you said, and try and think they can average out their losers by buying more at lower phases. The one principal rule is you don't catch a falling knife. So that's one very important thing. Number two, like you said, we are none of us are advisors, or they should go to their own financial analysts. These are not buy and sell calls. Third thing is, be aware, even if you're a part-time investor trading. Of course, I've read that poison story, and I was very disturbed and distressed. If you don't know the market, stay away from FNO. Just do retail investing, or like Yash said, go through ETF or mutual fund or whatever. Fourth thing is, be aware of the not only the market, read the reports of the companies people are talking about, tipping on Twitter, especially. Every day you get 100, at least 1,000 tips. Somebody says buy this. Go and find, do a little background research before you buy. If you don't know the business, don't enter it. Don't enter the stock. Frankly, that's what I try and do. More important also is to understand the world around you. Remember, we are no longer in an isolated economy since the 1990s, and we've opened up so much that if America sneezes, India catches a cold. It's like that. So what impacts a market in Japan will eventually hurt your NSE or your BSE
Yeah,
or your stocks.
exactly.
So you've got
Sanjay, I
to
think we have
understand.
lost you.
You've got to
Are there?
understand. Oh, you lost me. I'm there. Am I here?
Yes, yes, please continue.
Okay,
I'm
sorry.
able to hear you.
You've got to understand there is a geopolitical reality that we must understand. If there is a Fed taper, what is a Fed taper? Are you all aware? I mean, the young retail investor who just jumped in, what is a taper? The taper is basically, the Fed is withdrawing. You can call it subsidy if you want. You can call it interest support, whatever. They're going to hike interest rates. FIIs who are based in the US will pull out money from whichever market, not only India, whether they're in Singapore, whether they're in the Hang Seng, they will pull out money to go and repay those loans before they pay. So you're going to see interest rates hike in the US. These guys have made their money. They're going to start pulling out money. Take a look at how much money the FIIs have pulled out in the last 6 months. You will be shocked. You will be shocked. It's almost 100,000 crores, and it's going to go up double. So you're not going to see a very bullish period for the next 2-3 months. If the US Fed has said he'd like to see 100 basis points rise from March to July, you're going to see at least 100% more selling in India by FIIs. I don't know if DIIs can buy that much. With the LIC IPO, with the boat IPO, with 5 6, liquidity will be sucked out of the market. You're going to see a large drop in the index. You're going to see a bearish phase. The other important part is in US dollar rate of oil. It's inching up to 100. Energy prices are at an all-time high because you've got China that shut down most of the energy production for to match greenhouse limits. You're going to have a tough time there. The fourth important point, which Accidental pointed out, was Ukraine. The US is warmongering, and they do this when they're in a tough situation in the economy. Their inflation is at 7.5% rising. Their economy is in the dirt. Please understand, read, and then go about your investment decisions. All these decisions impact us. What does the US do when their economy is down in the dumps? They go to war. Please look at the history of the world in the last 50 years, 70 years. You will see they have entered Iran, they have entered Kuwait, they've entered everywhere. Every time, and the war is the biggest generator for their economy. You get defense production, you get aviation production, you get people getting, everything booms up, and everybody wants protection. So Biden's ratings are at their all-time low. He's going into an election year in a year and a half, 2 years. They're all trying to do this now. Though Putin is saying they're not doing anything in Ukraine, France is trying to intervene. You can hear the hawkish sounds coming from the US. The moment anybody lands in Europe from the US, you're going to see stock markets going through twice as worse as what they went through in 2020. Please be aware of this. So all these geopolitical factors will affect your index. It's not only so buy good fundamental stocks when they're down, because they're going to go further down, and then they're going to rise eventually. You will see that. So this is what I just wanted to touch upon, because a lot of us in the market, at least here, don't look at all these factors, but these are factors that you know maybe the more educated, the big guys do, and they keep tweeting about. Read them. Don't read about the guy who's giving you a penny stock to make a multi-bagger. It's going to drown you. Thank you. Sorry
Yeah, Sanjay,
if I was too long.
Sanjay, I tell
Yeah.
you my experience. Initially, when I joined Twitter, it was not much longer. Obviously, 4 5 months ago, I have got much active. And initially, I was also after people who were in soliciting certain kind of tips, and I was very fantasied that yes, these people are telling this and this target. That phase was different. But as and when a person starts studying and trying to relate things which are happening in market, so I cut down on those handles, and obviously I'm not following them anymore. So idea is just to say you have to be prudent who you are following and what that person is offering. We are not against anyone. Everyone has their own I mean interest, or maybe vested interest, or maybe area of expertise. We are not against anyone. But the idea which I want to convey is, it is your money. Nobody is going to share your losses, right? So it is better to avoid tips, and even if you are looking for tips, you have to be very certain. You have to substantiate that thing with your study, then only. And obviously the biggest learning in market is that always value buy, don't overpay. That is one criteria that will help you build great wealth over a period of time. I know my experience is very small in this market, but I have studied the book from many learned investors who had 30 40 years of experience, and obviously they have seen various aspects of markets. So based on their experiences, they have shared these studies. So value buy is one thing everyone should look for. So with this, Yash, if you have to add, and one more very important thing, as Sanjay ji was talking about geopolitical things, Putin is born to Ukrainian mother, so he has that kind of bond with Ukraine. And the NATO thing, I mean, Europe and US are meddling with the issues in Ukraine. So perhaps that is one reason for his aggressiveness on this front. So that is what I want to say. So Yash, go ahead, please.
Yeah, thank you, all the speakers, for sharing your thoughts, and would love to hear more views from the people who are in the room. Please raise your hand and we'll invite you as a speaker. In the meantime, we can reiterate the points which we have already discussed, that one should do his or her own due diligence and not falling for the tips trap, whether it is on the YouTube or Twitter or Clubhouse or any other social media platform. So please do not fall for these tips. Do your own due diligence, consult your financial advisor, keep your allocations very small and invest gradually. And as accidental investors mentioned that anything which you are buying at a higher price, you won't you would be regretting it sooner. So always buy when the valuations are very attractive. Otherwise, the better way for retail investors or individual investors is to take the mutual fund route. And in that also, as we have already discussed, index fund mm, would be could be a more appropriate investment vehicle for you. So look for the index funds if you are new to the market, and after that, once you gain experience, then build your conviction and then buy gradually. That is the way to go. Yeah,
Yeah,
accidentally
very
missed.
thanks, Yash. Very rightly said. So, Gaurav, we interrupted in you in between when we were allowing you. So, if you have any question or anything to add, please go ahead and then we move on to Anup. And also, additionally, I would request from the listeners if they have any questions, please come up, send your request. We will approve and we would be happy to associate and take up your questions or anything if you have to add. And also, in the meantime, I would request the audiences or maybe the fellow family members to follow us if you find value in our space and spread a word if you like this space. Thank you very much. Gaurav, go ahead.
Yeah, so other one thing could also be done. There are value index fund also. So value index fund also, if somebody is interested, maybe you have to do your own research and your own study. The second point is what market is always risky. It is always uncertain. That is why it has a risk premium. So something or the other will be coming up, and uh, what what I would say is that you should check your risk appetite, whatever your risk appetite is, and then do the allocation based on that. Not look at market level or market this thing, how uncertain the market is, and so on and so forth. If you are a long term uh, investor,
Yeah, very
because
rightly said.
that will add additional complexity of timing. So unless you are expert, basically, if you are a long term investor, then uh, I mean dollar cost averaging or rupee cost averaging, you can simply continue doing it, and then not look at the uncertainty level or the news or the market level, and so on and so forth. It is relatively suboptimal because anyways rupee cost averaging is another form of market timing, but then that is relatively fine uh, for new investors and the
Yes,
people who do the
it's very
mutual
well said.
funding.
Very well said, Gaurav. Other than the tips which people or retail investors or individual investors receive from TV and social media, there are a couple of more things which one should be guarded for. One is the IPOs which are coming in the market. Majority of IPO after 6 months are traded at a discount, so that one should keep in mind while investing in an IPO for a long period of time. And the second thing is the same is applicable to the NFOs of mutual funds, the new fund offers. Whether these NFOs are being launched for investing in India or outside India, whether it is in US, Europe, or any other markets. Please read their offer documents carefully, assess your risk profile, allocate a very small portion in all these IPOs or NFOs or hotly discussed sectors in media or TV. And after your due diligence, only then put your hard earned money. That's a request to all of you. And yes, we can invite more people, accidental investor. Please go ahead.
Yeah, yeah, thanks. Yeah, very rightly said by Gaurav. The risk is one thing which is very vital as far as investments are concerned. Everybody has different risk appetite and different, but one is calculated risk and the other is blind risk. I have seen people who have borrowed money on interest and they are investing in crypto. So you can see the height of stupidity, right? Until and unless you understand one thing, you should not be going blindly after it. The only thing they are going after it is FOMO, for fear of missing out. Other peoples are gaining out of it. Perhaps they are well placed before they have invested in the initial times and they have gained some money. So my idea of saying this is not against the cryptos or any kind of asset class. The only idea is the risk has to be calculated, and when we say risk, it has to be supported by some study, right? The risk reward things has to be seen at all times. It is not there that you will go right in market all the times, but you have to be probabilistic that whenever you go right you get good returns, and obviously when you go wrong the loss is minimal. And apart from this, there are various aspects in markets. So the intricacies of market should be well studied. So market is not everybody's cup of tea. We have only few percentage of people who gain out of market and maximum are losers, and in the end they curse market, saying that the market is a gamble place or so. So this is the asset class which has historically given maximum percentage gains to people, and specifically multiplied or made very eminent people like KDS or Junjunwala and many people have multiplied their wealth manifold. So basically it's an ocean where you have to see how much you can reap out of it. So with this, we will move on to Anup. He has been waiting for long. And apart from that, if anybody has any questions from the listeners, please do come up with their questions and please do follow us here. Yeah,
Yeah,
Gaurav, you
before
were saying?
Anupji, before you speak, just I would like to mention both the points which accidental investor has mentioned. One is about leverage or the loan you take, whether you are playing in a crypto market or F&O. Please be aware of the risk associated with taking high leverage in your accounts. And second is about reading. There are many investment related books as well as websites and apps like Zarodavasti kind of things, which are new investors who are coming in, who have come in the market recently. They should read about these, understand these products, and then only take a investment decision in stock market either directly or through mutual fund. Yeah, Anupji, please go ahead.
Yes. So, like we are speaking for benefit of new investors, so I would like to share one of the incident which happened with me yesterday. So, one of my friend approached me because his one of his relative was offering him insurance linked assured income plan. So he shared with me, should I buy it or not? So let's. I would like to share, give brief about that. So that
Yes,
one
please
of
go
his,
ahead.
yeah, one of his relative was offering him the plan, and it was like 20-year plan. We will pay one.
I think we lost Anup, or
Yeah, I am also not being able to hear him. So
Yeah,
excellent,
same
okay.
here.
excellent
So,
investor. If we do not have many requests from the listener side, maybe we can wind up in another 5-10 minutes because it has been almost an hour when we started.
yes,
I just want to add Yasji one point.
yeah,
Yes, please
Gaurav
go
can
ahead.
take up.
Please go ahead.
Yes, one second,
Yeah.
1 second. Yeah, yes. I mean, there are many people who were busy for the time which we started our space. So perhaps we will continue for a while,
Sure,
and
sure.
they are likely to join. And we have several requests. I think we'll be taking questions from people as well. So
Yes,
Gaurav,
please go ahead.
take 30 seconds and say whatever you have to say, and then we have Vedant. We will take up his question, or perhaps if he has anything to add, we will take up that.
Hello, I got kicked out of the space. Sorry, guys.
So
Yeah.
Yes, please, Anupji, please go ahead. Gauravji, we'll come back to you.
Yes. So that plan was like we have to pay 1,50,000 as a premium for initial 12 years, and after that, at the end of 20 year, he will get some. After 13th year, he will start getting some amount back. So net sum it was 18 lakh premium we will pay over 12 years time, and at the end of 10 year of 20 years, he will get back 25 lakhs. So net it will be around 35% return, and for nominal cover. So that was not at all beneficial. So I advised him not to mix investment and insurance with this product. just have a separate health insurance plan for family and have a separate pure term plan for himself, and go for rest of the premium as a index fund SIP for next 20 years. He will earn more wealth with that and have a more sufficient health and life cover with the pure insurance plans, and not to go with income linked plans. So that's what my advice to new investors: do not fall for such assured income plans offered by insurance companies, be it LIC or any private companies. Have always separate family health insurance and a pure term plan, and whatever rest of the amount is there, you can go for long term SIPs, which will give you more returns and long term wealth. So that.
Yeah, brilliant advice, Anup. And obviously, whenever we hold some spaces and when we are talking general things, we come up always try to convey this thing to our listeners that the ULIP plans are basically a waste, or perhaps you the opportunity cost. Basically, you are holding your money and you are not gaining out of it. So basically, the insurance things should not be mixed with investment should be kept different, and insurance should be kept only for protection thing. As very rightly said, we should always consider few things. We should have an emergency fund, depending upon your responsibility, a term plan. And obviously every member of the family should be well covered as far as health insurance is concerned. So those who have not, I mean, even with us this was the issue, we were not aware how to go about it. It's not like you have to do everything in one day. So take your time, try to study the sphere, be it market or these insurance things. As soon as you try to get into things, it is not difficult. These days YouTube is one place where you can find something like anything. That's the quality being offered if you look out for a few videos. So basically, whatever your queries are, it is always good to I mean, consult and find out what is best for you. Yeah, Yash, go ahead.
Yeah, great points being added by Anupji. Thank you very much. Yes, we all should be aware of what our aim is, and we should not mix up our investment decisions with our health insurance or life insurance protection plans. Right. So these decisions should be individually and separately evaluated, and then only one should take a call on these things. Yeah. Next, we'll go to Gauraji, who's waiting for adding something of his views in this space. Please go ahead.
So just wanted to add a small point regarding cryptocurrency. Cryptocurrency is not, I would say, in my opinion, is not an asset. It is highly correlated with the stock market and does not provide any diversification benefit until now. Now in future it may, what happens, I mean, we can definitely discuss on the technical aspects, that's a separate thing. But if we just look at the price movement, it is highly correlated with the stock market. So that's a point, because some people think that if they diversify into crypto, they, if the stock market crashes, that crypto investment or whatever it is would help them. But that has not been the case based on the past data.
Very correctly
You know,
mentioned, Gauraji. There is no empirical study which has been done which provides us the substantial evidence that the crypto provides the diversification in terms of an asset class or as a currency. So it neither qualifies as a currency nor as an asset class. So one should be very aware of the risk associated with cryptocurrencies. But there has been a as accidental investor pointed out, the people who are coming into this space is more driven by the FOMO, fear of missing out factor, and the same is going on with the IPOs or the NFOs. And we keep continuously keep continuously giving warning about all these things through the various Twitter spaces we hold from time to time. Yeah, excellent investor, you wanted to add something? Please go
yeah,
ahead.
a very funny video was doing round on Twitter, basically from the money heist. I mean, what we say characters, and it was dubbed in Hindi that a person was, I mean, went for langar near a temple, so उसको लंगर भी नहीं मिला और बाहर से चप्पल भी चोरी हो गई. So such kind of incidents happen with people who are investing in unlisted space and maybe the unregulated rather. So Sanjay ji, you have anything to add with your experience? What are the, I mean, certain things the beginners should be very careful about, or what are your learnings or mistakes in the market? We would be very happy to hear about your experience, and especially if you want to share your experience from your domain of airlines, so that would be really helpful. Thank you. I hope you are not busy. If that is the case, you can DM me and we can move on to next speaker. So we
Yeah.
had Vedant from the listener who had the center request. So we have many audiences. Certainly, they would be having certain questions. So, buddy, you any vague question would be as good as a good question. So, if anybody of you have any doubt, any questions, or anything to add, please come up here. It's a very interactive space. We are also like you. We are not. We have not come from a different planet, or we are not SEBI registered advisors that we'll be talking sense only. So everything under the sun we can discuss here. We would love to hear from you people. And additionally, if you are liking our space, I would request each of the participant to follow our handle so that in future, whenever we will be holding such spaces, so the notification will be sent to you, and the you can join such rooms for value addition. Thank you.
Yeah, very well put, accidental investor. And about this crypto, which both accidental investor and Gaurav have mentioned, I would just like to give my 2 cents on this. See, the whole concept of this decentralizing the currency, that is the charm behind this crypto gaining acceptance world over. Just think about it. The same thing we have seen in the other asset classes as well. If you consider crypto as a asset class, right? For instance, last year in US, there is a Robinhood and another app which went against the big people in the market, and they did what is called as a short squeeze. The entire concept was to decentralize the financial markets, but we saw what happened later on. Then these same people got crushed, and when the short squeezing was stopped, uh, when the market makers stopped taking their orders, all these people face the brunt. So please do not fall for these narratives, whether it is in equity market or in crypto. Decentralization of financial markets or equity market is very, very difficult. The people who are in the market are hedge funds or big institutional players. They have lot of money, lot of lobbying power, and immense strength in the market. So anyone falling for the narrative should be also ready for burning their own capital, their hard-earned money. Please don't fall for these narratives. Whether it is being shown in, as accidental investor mentioned, that the web series which is being shown on the Netflix, Money Heist. The basic concept behind that is the same thing, decentralizing the money. But whether you do it, what is being like what has been shown in Money Heist, or whether you do it in a Robinhood way, or whether you do it in a cryptocurrency. Decentralization is a narrative very difficult to achieve. I may be wrong, but for retail investors or individual investors who have very small amount of money, please be very watchful of these cryptocurrencies, IPOs, or decentralization theme. That's my point.
Thank you, Yash. So, Anup, anything you want to add? So, shall we assume the all the speakers are so much learned and they don't have anything to ask? Come up again, yaar. Please send request. Anup, go ahead, please.
Yeah, I do not have any specific point to add, but will be happy to answer any of the queries in my competence. So we'll be adding on that. But like few things I am following right
Yeah,
now, I would
Anup,
like to.
Anup,
Yes,
let me ask you a query that would be helpful for the beginners as well. So basically, the taxation thing, right? So
yes.
short-term capital gain, long-term capital gain. So want to know your opinion on these so that the if you can explain in layman's term and the audiences can get benefit out of it. A very burning question is whether the short-term capital gain is levied. I mean, it should be. I mean, as per your tax slab, or basically it is flat, and everyone, even if one person is gaining $1,000, he has to pay 15% out of that. That would be very lovely if you explain it to everyone. We also
No,
have
like,
Kshitij Bhai with us. We will also request him to the space
yeah,
also.
we will like to hear from Kshitij sir on the SEBI's final order. Let's give him that point to answer. Hello, Kshitij sir.
We have sent you a request, Kshitij Bhai. Kindly accept it.
Actually, I was waiting for Yogesh sir. He has very nice perspective about legal angles related to all of this.
I have reached out to Yogesh sir. He was busy with his clients. So as soon as he gets free, it is very likely he will join us and add the value to this space.
Or maybe accidental investor, we might host another Twitter space maybe tomorrow or sometime next week if he is available.
Yeah, surely we will do that. In the meantime, we would love to hear from Kshitij Bhai. Kshitij Bhai, if you are, oh, he has left the space. Anyway, yeah, Anup, you was telling us about it.
Yeah, like all of us know, like short-term and long-term tax, how the those are things are planned, and already budget has no changes in the taxation part. So, as a long-term retail investor, I'm following one concept of tax harvesting. Like in long-term gains, we can earn one long-term gains up to 1 lakh rupees as a tax-free. So, I am trying to plan some of my buying and sell opportunities to have that benefit every year as a small scale investor. So one can plan that. So you can earn at least 1 lakh rupees
No,
as a
no,
tax
Anup,
free.
text harvesting is a different concept. I agree that is a very good way to do this when your capital, or when you are in the start of your trading or investing journey, as and when your capital grows. And that should not be wise. I mean, I have heard from different people. I don't have any personal views on that. So basically, I am tell me about your views on short-term capital gain. Say a person, if a person gains X number of rupees in a quarter, so how he should have to pay his tax on that, a flat 15% on the basis of, I mean, quarterly or advanced tax or whatever it be. So that would be very helpful for the audiences, including me.
So if you are doing, I don't do short term trades. If anyone does short term trading, so one can keep track of, once we can get the statements, and accordingly we know, like in a year what short term gain we are making, and we can plan tax amount to be paid in advance, so that at the end of year you will not face any much lump sum burden to pay when it comes to filing, because we have to pay at the end of it. Taxes and death are certain in the market, so we cannot run away from that. So one need to keep track of if he is following short term strategies, and make your trades accordingly, so that if you are paying taxes. So that's what I follow. Like, I don't do short term trades.
Okay, okay, got it. So Yash or Sanjay ji or maybe Gaurav, they have any view over my question? Anything they have to add?
Yeah, accidental investor. Thanks a lot, Anupji, for sharing your perspective on these things. As correctly pointed out by you, that if someone is doing day trading or F&O trading or showing it as a business income, then he needs to worry about this in a short run. Otherwise, those who are taking delivery based in those who are doing delivery based investing, or those who are the long term investors, only the two tax brackets they fall into. If you are holding a stock for less than 1 year, then the tax on your short term capital gain would be 15%, and if you hold the stock for more than 1 year, that would be 10%. So one new investors who are new in the market, they need to consider only these two things. And after the financial year, this which is coming close by, after March, you need to calculate, sit down and see what are the buys and sells you have done in the last financial year, and then according to that you can calculate your short term capital gain or loss and long term capital gain and loss, and then you can pay that to the government, or in case of losses you can carry it forward to the next 8 years. That is the provision in IT, income tax act.
So yes, I have one follow-up question on this. So basically, if a person is say earning 10 lakhs of rupees and he have gained say 1 lakh rupees of short-term capital gain and 2 lakh rupees of long-term gain, so how he would be taxed? So
Yeah,
basically,
so the
is
short term capital gains of 1 lakh rupees will be taxed at 15%, and long term capital gains of 2 lakh rupees will be taxed at 10%.
so yes, I have a little correction on this. So basically, there is an exemption of 1 lakh rupees on
Yeah,
long-term.
up to yes, Anupji has already mentioned, up to 1 lakh rupees you need not pay any tax. These two tax brackets are over and above 1 lakh rupees capital gains.
Okay, so for 1 lakh, you need not pay short-term capital gain as well.
Yes.
Anup, am I saying it right?
No, whatever short-term tax gains we make, we have to pay 15% straight on that.
Yes.
On long-term gains, it is free up to 1 lakh rupees. If you
There
make
is an
1 lakh
exemption of
10,000
1
gains,
lakh only
1
for
lakh rupees will be tax
capital
free,
gain.
and after that,
Anup,
10,000 rupees
so
will be tax
Anup,
free.
Yes, Anupji, let me thank you for correcting me. Yes, and I also need to recheck the income tax brackets. I am sure that you're saying it correctly. Thank you for correcting me.
and also I had a word with Shitesh Bhai. He was actually running when he joined the space, so he couldn't join the request. Otherwise, he would have added value to our space. So with this, Anup, I also want to know your view. I mean, say if a person is earning 10 lakh and some short-term capital gain is, so both are, will be taxed separately. There would not be any combination. I'm right. Am I right?
Yes. Both will be tracked separately. As right now, we don't have that thing updated in income tax portal, but coming days it will be automatically updated because we are the portal is planning to add our DPIDs with our PAN card. So
Right.
going forward, you will not need to track and update those things manually. It will be automatically
And there
there.
is a module, yes, newly added module in the, I mean, on the portal where annual income statement is shown. That also include your equities or such kind of investments, and basically the interest you are earning from various sources, maybe FD or savings, etc. So
Yes.
basically, we are moving to a very what we say solid. I mean, portal where we will be getting, and I also think Anup, this TDS tax deduction at source that should
Yes.
be introduced, right? Because
Yeah.
that would be really helpful on the part of the investors if it is
Yeah,
deducted
it
by
is.
the.
Recently, they have started like there is a form 26 something. You can see annual statements and you will see all TDS sections there. Be it any dividend or any lump sum amount you are getting
Yeah,
from
basically,
policy
you are talking about
renewals.
26 AS portal and the dividends. I mean, not certain about all the companies, but there are few companies who tax dividend at a certain, I mean, prescribed rate, and some give it in lump sum. Basically, the first 5,000 of dividend income in a financial year is tax free, and anything above 5,000 would be taxed at a fixed rate. That is, I think, 10%. I'm not very sure. I'll confirm.
No, not 10%. According to the one's slab rate.
Okay,
If
yeah,
one,
okay.
yeah,
Yeah,
if one
thank.
falls into 30% slab rate, then it will be taxed at 30% slab, 30% tax.
Yeah, thanks, Yash, for correcting. Basically, that would be added as a income to that person. So obviously, that would be taxed as per the slab of the.
Yes.
Very rightly said. So this was a very interactive session. And anything you three speakers, Yash, Sanjay ji, Anup, Bhai, Gaurav, anything you have missed out or you want to add so that our listeners or perhaps we ourselves learn. So anything you have to add, or we will once again request people if they have any questions, please come up. Otherwise, we will cut down our discussion because we have already taken more than an hour. and obviously, especially for me, it was a very interactive as well as a full of learning session, and I hope all the speakers also feel the same. So, and
Same
I
here, excellent investor. And we thank all the people who have joined today. And if you do not have further requests to come up as a speaker, let's wind it up for today. And we'll hold more such spaces in future.
Yeah, we have fixed Saturday 6 p.m. Weekly or bi-weekly on the advice of Sanjay ji. I really appreciate the smiling face of Sanjay ji and his proactiveness and the way he appreciate good work of all the people all the time. He is a very jovial person, and I feel blessed to have him in our Twitter circle, and especially all the people who are adding value in some manner or the other. I would personally thank Yash for being a good co-host today, and he is also sharing his insights with all of us most of the time. And he is very active when I'm in Clubhouse. I myself is not that active on Clubhouse, and probably in future, depending upon availability of time, I would love to explore that space also.
Ye-
And
yes, excellent investor. Please join. I have been a regular speaker in Clubhouse in night in couple of rooms over there, and they are very good spaces to learn about markets, about sectors, and what is happening around us. So let us wind up for today's. If we do not have further requests, excellent investor, please go ahead.
yeah, yeah. And I also thank Anup and Gaurav for proactive in adding value to the space. Anup has been always a bless for our spaces. He is very sorted, and he also explained good thing. And Sanjay ji is a very, I mean, what do you say, seasoned investor, and he has very wide views on almost all the aspect we discuss. I have observed in various spaces and interactions with him so far, and I personally like the tweets he shared on his handle. And Gaurav is, I think, new addition to our family. So Gaurav, we will also request you to come up in our rooms in future, and also be a regular part of our Twitter family. And those who have stayed for so long, I think we have added some value to your knowledge, or perhaps you have listened whatever we know. And from next time, we would request you speaker, you listeners, to come as a speakers and add value to our knowledge. Thank you very much, each and every of one who has joined today. It was very wonderful. I sincerely hope in future also we will continue to hold such interactive spaces where we try to help each other in learning new things and discuss whatever we know. So with this, the closing remark would be, if you haven't followed us already, I would request you to once again go and visit our handle, so that you will get to know what kind of people we are interacting and what kind of knowledge we are, little knowledge rather, we are sharing with you all. So thank you very much who have spared our time despite busy schedule, especially Sanjay ji who was busy. And the beauty of market is you cannot resist when it comes to adding value to people. So this is the beauty of these spaces. So thank you very much. I'm closing the space and hope to see you people very soon. Thank you. And
Thank you
yes,
all.
Thank you all.
yes,
Bye bye. Have a
yes,
nice weekend.
yes, I would, Anup, yes, I would request you to organize a space next time, and I will be a part of listener for you people. You
Sure,
people
sure,
are brilliant.
sure. Thank you all for
Yeah.
coming today. Thank you so
Don't
much. Have a nice day.
And Sanjay ji, we will specifically host you one day. So
Thank you.
kindly share your availability.
Definitely. In fact, I will be
Okay.
hosting a space very shortly, and I will ask you.
Yeah, that would be really kind of you. Yeah, we are just beginners. We are here to
That's
learn.
right.
Obviously,
Yeah.
we'll listen you for sure. Thank you,
Yeah.
Sanjay ji, and please
Thank you,
follow
Yash.
us here.
Thank you.
Thank you.
All again.